I want to go into my little rant about buy and hold investing here. I've also been told that I'm not a buy and hold investor because I sold out of 2 small holdings in a short period of time. And I must not be a buy and hold investor. Now, I know this is an appeal to authority, right? But I think it's a good one. Warren Buffett is considered the buy and hold investor. He says that his preferred holding time is life, and he does hold companies for a very long period of time. But if you look through Berkshire actual activity, every single quarter they're selling companies. Last quarter they sold completely out of 2 and trimmed 5. The quarter before that they sold out of 3 and trimmed 4. The quarter before that they sold out of 2 and trimmed like 10. Quarter before that they sold out of 3 and trimmed 6. They sold out of 11 companies in the trailing 12 months. 11. That's a lot. Even though they own a lot of companies, 11 is a lot in 1 year. And this is, again, the buy and hold king, Warren Buffett. The reason that he trades around his holdings is, again, he doesn't live in a static world where nothing changes. Some of these companies have better valuations. There's many great businesses to invest in. And I take issue with people having the attitude that buy and hold means you buy into a company and you're not a buy and hold investor if you ever sell out of it for a company that offers a better risk reward adjustment. Let me just say this about, I think, the downside of that attitude. Thinking that buy and hold means I never sell for any reason. If you have that attitude, I think in many cases, you're going to become sort of objectively unaware of what you're invested in. Meaning, if you think that you can't sell a company and you can't objectively look at different value propositions in the market, then you're going to hold on to companies that aren't the best option in the market at a given time. You might actually become attached to a company, emotionally attached to it. I see this happen all the time online, like all over the place. I think the majority of investors get emotionally attached to their company, making it so that it's very difficult to give an objective analysis of it because they're attached to it. They don't treat it objectively, they treat it emotionally. I won't pick on anyone in particular, but you'll know what I'm talking about. There's entire investment communities, groups and channels that are centered around one particular stock. Do you think that they're objectively analyzing a stock that they've built their entire community around, that they have this big history with? Of course not. They're treating it like it's a family member, like a loved one. They treat it like it's their spouse or something that they have a relationship with and they're bound to. People have that type of relationship with stocks. And I have to remind people over and over again, the stock isn't in this with you. The stock doesn't know that you own it. It has no attachment to you. You might have built an attachment to a stock emotionally. You might love this buzzworthy company. You might have built your whole brand and identity and it's part of your character. It's not for the stock. It's a one-way relationship. It's not like a marriage, not like a family, not like a cousin. This is a one-way thing where the stock doesn't care about you at all and you have some attachment to the stock. And I think that's a mistake. I see it online all the time. I have zero emotional attachment to my stocks. None. The only one, I'll give one exception, maybe a little bit of Costco. That's the only one that I have some type of emotional attachment to. Outside of that one, there's no emotional attachment here. And I kid. Even in the case of Costco, I'm wanting to make money on the stock. That is the primary driver. I don't have any emotional attachment to it. These companies are not my family. They're not loved ones. I'm not bound to them by any means. If I see a better opportunity in the market than a company I currently own, I will sell one of these companies and not second guess it. I'll sell it in an instant. I'll drop a company right away. I don't care about the history. I care about making money with my companies. I take the view that Reed Hastings takes running Netflix. He tells employees, just to be clear, we are not a family. We're a team. And in teams, top performers stick around. The people that aren't performing well, they go on to a different team and they get a nice severance package. That's how a team works. We only have all-stars on this team. You have to be performing top at the very peak. That's the people we keep around. A family is different. A family is where a member of the family can be struggling, not doing well. You know, they might not have a bright future, but you still have to support them and love them unconditionally, right? There's no conditions with the love. Stocks should not be treated like family members. If a stock is having a difficult time, if it's going through stumbles, you shouldn't stay married to it and loyal to it like a family member, because you have some type of connection with it. You should drop it and replace it with a team member that's going to do well in your portfolio. So in some ways, I see the whole buy and hold thing being translated into never selling out of a company, because once you bought it, you can't change your mind. I think that's a huge farce. I think investors should be able to change their mind. When you get new data, when you get new insights, you should be able to change your portfolio. So in my opinion, you are going to see changes with my portfolio from time to time. Hopefully my decisions are sound enough that I get into companies that I really have enough confidence in their future that my initial research pays off. And I think that'll be the case. Some of the companies, by the way, a lot of them, over 6 holdings in my portfolio are companies that I've held since day one investing in them. The first companies that I ever bought in my portfolio was Apple, Microsoft. Day one, I bought those companies. I also bought Target and Nike. Those are 2 companies, and Disney. This one hasn't worked out as good, but Disney's one that I've held from day one as well. And JP Morgan as well. Those are companies I've held for a long time. So I'm willing to hold companies if I think the story continues to develop well, if I think that they're having incremental improvements in their developments. But again, I view this as a team, not a family. If these companies don't perform well, fundamentally speaking, if I see them going in the wrong direction, I will replace them with a better company that's firing on all cylinders and doing a good job. So hopefully the companies that I've added new to my portfolio are going to execute well. They're going to have good developments over time. I think Texas Roadhouse and Starbucks are 2 of those companies. I really think I'm going to make money on these companies. So that's my little rant on buy and hold. Don't become attached to your stocks. They don't know that you own them. They have no attachment to you. They are vehicles, instruments of making money. If you're not making money from them effectively, then move on to a stock you will. And a dollar gained from some unflashy company like Costco, that dollar, I think, if I'm not mistaken, it's worth as much as a dollar earned from Tesla stock. If you earn a dollar invested in Tesla, I think that's worth the same as if you earn a dollar invested in Estee Lauder or Ulta or any other company. I'm pretty sure that's the way it works. So don't when we look at these type of things, just keep objective. That's all I'll say on that.